Monday, December 18th, week from Christmas. We have all of this week that's the markets are trading. They'll be closed a week from today on Monday, Christmas Day, and start up again on Tuesday, the day after Christmas. I'll be talking about the Santa Claus rally, which we will start buying early on Wednesday morning this week, again on Thursday morning this week, and Friday morning this week. And I'll give you, if you're interested, the exact time. Contact me at info, I-N-F-O, at ersignals.com. That's signals, plural. Info at ersignals.com, and I'll send you the information and the track record for the Santa Claus rally, but you'll see it happen real time. Well, after the fact, by about a couple hours on Wednesday, Thursday, and Friday this week, and how the trade progresses between Christmas and New Year's, and we're going to be selling out very early in January. But all the information is available. Info at ersignals.com. The E-mini March futures contract is what we're looking at. And I do start out with the indexes, as you know, has been and is still incredibly overbought. Very high on the scale, refuses to stop rallying. The economic news we had from the Fed last week was taken very friendly, and that's after the market had been rallying substantially in the first place. A little unusual, frankly. So this is still prime territory for a reversal. All of my indexes are overbought, and some to a very significant degree. So very frankly, I'm expecting any moment, but it hasn't happened yet. A key reversal, a bearish engulfing, and because of the overbought conditions, it'll be an official sell signal that hopefully will cause a bit of a dip in the market. In the case of the March E-mini, I'm looking for 4,655-ish. Next, we've got the Spider SPY that has not made a higher high for the move at the moment, but it is right around or a little bit above the previous highest closing price, which was just Thursday of last week. So there's no real evidence at this point that the Spider is doing anything bearish. But again, expectations are high. Next, Spider 1 minute, open on strength, tried to back up, did not make a new low lower than the first minute of trading, and has held on downside reactions so far this morning, real time, minute by minute. And of course, this is Friday, and I'll show you 3 more days. That's the Thursday top. Early in the day, challenged, and then sank a bit late, and a little bit more on Friday. But today, we're right back up in that resistance area, and it's not much. Just don't have the reversal yet. Next chart is DIA. Totally a new high ground. About to have maybe a closing price that is a new high close, and a couple other indexes could do the same thing very easily. And also extremely overbought every single day for a month now since November 14th. Very unusual. Tried to top out twice, not successful. I can't help it. I expect to see at a minimum correction down to 363.40-ish, and maybe down to support area at 356.30. Next is the Russell, which on Thursday did make its highest high, and Friday came down a little bit, closing price in the high. And today so far, the Russell is just exactly unchanged basically at the moment, with no higher high or lower low. So it's a doji inside trading range unchanged. Looks like this one could lead the way down because it's the weakest, the quickest so far. And it has a gap to close at 193.75. So I'm expecting at least a move down to that price. Frankly, that's not really very much. More likely than not back down to about 188, 189. Next, QQQ daily is in new high ground and may have a new high closing price. And it just won't quit. This is one of the strongest at the moment, with the Russell being the weakest. So any reversal at this point, getting below the previous day's low in almost every index, would create a bearish engulfing sell signal, and we'd be on our way down, in my opinion, to cheaper territory to be buying toward the end of this week. Next, most of the stock market indexes. Now, our research is done on the SPDR, the SPY, and we fiddled with the other indexes, which did very, very well. And I'll be showing you actually a couple of examples and the equity plot for the 25-year history toward the end here. So NASDAQ futures, new high close potential, very, very good. Now we're going to go to futures. We've got the E-mini first from a different perspective. It's way up there now. On this, all these futures contracts are continuation contracts, so they're not the exact contract month. Although at one point in time they can be, they are, and then they slowly roll their calculations between the two leading nearby months, reflecting the way the market's moving very, very nicely and pretty accurately price-wise too. So here we are. Overbought like crazy. I'm expecting retracement. We're a new high ground for a long time. I want to point out that we did get this year, October 15th of 22 last year, I'm sorry to say, October lows with a gigantic bullish engulfing. This year we got an October low, but no particular signal other than support and oversold conditions, and it worked fabulously. This was December 26th of 2018, when the market had been coming down for approximately a month or more and reversed like crazy the day after Christmas. Now, it's the same kind of reversal with the same results, if not better. And December of 2018, that we had the same reversal and very good results, to say the least, on October 13th with the same signal. So if we drop enough between here and, I'm even giving it a day or two after Christmas, but that's about it. I'm hoping that any decline we have will turn back up again. Frankly, the low one trading day before Christmas, Friday this week. We'll find out. Next chart is NASDAQ futures, overbought, new high ground. And this is a continuation contract. And we are very much back into that topping out area that we had in October, November, December of 21 before the bear market of 2022. Next is the bond market. We have a high today, one tick lower, 1/32 lower than yesterday's high. Therefore, no higher high, which would have generated a bearish engulfing and a red ER sell signal today, right now. But it didn't make the higher high. Came so close. Everything else is there. Resistance area, overbought conditions, I think we're turning in the bonds, and that could help the indexes. Stock indexes turn down. 10-year notes is an inside day so far, but at a lower close potentially, and could easily drop off below Friday and even maybe Thursday's lows. We are still long, losing a little bit of our profit from a trade from the very bottom of the market here. We had a bullish engulfing smack dab at the lows on October 23rd, and we got into an ER3 trade 2 days later. First day was a loser on the close, and never saw a loss after that, all the way up, and we're still in the trade. And again, the entry date was October 25. I am expecting it to get stopped out, I think, on this dip. I'm expecting into Christmas or slightly after. Next chart, crude, up a little bit, starting to clear the top of the resistance area. This rally could carry up to the next resistance zone up here fairly easily, and maybe in a week or two. So I'm looking for a rally back to resistance, and that would be up to 80. Next chart, we got natural gas. Kind of the same thing here, oversold for several days, a couple of weeks, finally turning back up in the middle of last week. New highs since then I think we're going to be rallying back up to this resistance area, and that could be pretty important. This has been a long-term bear move, started by a head and shoulder top that worked perfectly, and we got a sell signal on the head of the head and shoulder top to the exact day. So, top of the market for a bear market that's lasted, what, two years? Year and a half. Anyway, year and a fraction. Fabulous. I think it's going to rally to resistance, and we'll see what happens next. Heating oil dropped off below support, but managed in an oversold condition to turn around at another support area. That's my green dashed line right there. And it's now back up into resistance. Now we're not overbought, so I think it could rally a little bit more, maybe the top of this resistance area that I've had on this chart for a long, long time. There's a chance it could get up to one more level higher, and that would be 287.5-ish. Next, gold. Top of the market lately, bearish engulfing. We got the top on this rally, almost exactly the high day. We got exactly the low day. That's a bad signal. That's exactly on the low for a buy, exactly on the high for a sell, and exactly on the low for that buy, and exactly on that rally high for that sell. Gold and silver have been very, very good to us this year. This signal is possibly extremely bearish. I really can't tell, but it looks like and that could be very misleading, a whopper of a sell signal. At the moment, we are back up to approximately where it closed on the sell signal day, around resistance, and resistance seems to be stopping it. But I got to start to see new lows here real quick. Next day, next week or two, that's below 1988, and then we're on our way down a lot more probably. Next, silver. Very similar comments. Got oversold in support, rallied a little bit, starting to slip off some. Not too convincing as yet. Resistance stopped and had a bearish engulfing exactly when gold did, same day, both silver and gold. We got the top of that move. We got almost the high of that, almost the low on that one, the high on that, the low on this one, the high on the double top in silver. That was amazing. We got two signals exactly on the two highs of a double top formation that worked fantastically, plus an auxiliary and a little extra. Next, platinum. Resistance stopped it, and that was a gap closure situation. Very accurate, very nice. Now we're up a little bit on the day. It's only been a day or two since it closed that gap at resistance. I need to get a new low in, a new low close, and then we're probably going to be coming off to 860s, low 860s, maybe even the 850s, low 850s if possible. There is a good support area, even a new low ground here since September of 22, over a little over a year ago. So that's not out of the question. Obviously bearish. Next, copper, rock in a hard spot, resistance a little bit higher. We're right in the middle of it. Support a little bit lower. It's bounced off of both like a ping pong ball. So let's see what happens when it tests the resistance or support next. Soybeans, we got a buy signal on the bottom, the low day, and we got a buy signal over here on the bottom, the low day in October 12th. Unfortunately, no sell signal up here, but it did get up to resistance and it was overbought and touch a trend line apparently, unless that line is drawn off of, and yeah, it is drawn off of that high. So it wasn't there to begin with. Now it is. So support has caused a buy signal, and we're in on an ER3 the next day, and we still are long. The stop is protecting a very small loss, in fact, but we have another high and another high close potentially since the low day, which is almost stopping us out, but not quite. And let's see if it can rally some more. I think it can. It should. I think this is a very good bullish signal in support, oversold, and bullish engulfing. Hey, my dream combination. So far, so good. Next, bean oil, whopper of a sell signal on the second high of a double top. We wrote it down until November 14th, but now it's basically been going sideways. So a little higher, a little lower than where we got out, but the market is basically just a touch lower than our exit price and date of November 14th, a month ago. So I'm not crying over spilt milk here. Next, soybean meal. Major long-term bear situation could be brewing. Double top formation over a substantial amount of time, approximately almost a year, not quite, 10, 11 months. Now we need to make lower lows again, but we got oversold recently and we're in support, but resistance is close overhead. Let's see if we can make a new low close lower than last week's low. That should start it to drop back to 363-ish. I'm bearish to neutral, not, I need to see that new low real soon. Next, corn. We got the bottom of the move. We got stopped out with a small profit. We're out of the trade, and it's now back down to about where the bullish signal was. I mentioned when they got the bull signal on November 29th that it is a bear trend. Don't expect, a gigantic big move. It rallied up almost to resistance, the beginning of it, and has turned down. This is a new low and a likely new low close since that little rally a week and a half, 2 weeks ago. And that was it. So I'm looking for new lows. Next, wheat. Very similar commentary. Up to resistance, got overbought, turned around, slipped a little, bounced on Thursday and Friday, and now I think it's going to see new lows. I think it's going to challenge 553 and go below that. Next, live cattle we had on Friday, and I told you at the time, or maybe it didn't happen before the YouTube was over. I don't remember. We have a bullish engulfing by the end of the day, period. It's ER1 is long and a small profit on the close on Friday and a little bit more profit this morning. ER3, we're unable so far. We're going to try to come down and touch these green dots in the next couple of days. If so, we'll be long again with ER3. I'm short-term friendly. I don't want to use the word bullish really, but no pun intended, I might want to. This is actually pretty good support. It just almost tested it. If you expand it a little bit to there, then we did test it. So not bad. I'm going to leave it like this, actually. I'd like that a little bit better. Just in time, bullish engulfing on Friday, and a follow through so far. How much higher are we going to go? I think at least 177, and it's not out of the question. 182.5 next. Live hogs. I think the rally is not going to go far. Resistance should stop this rally, and it got really close to, or maybe even touched the first area of resistance. Maybe not quite, but came super close. Neutral to bearish, looking for new lows below 66. Next, OJ. Well, it came down to that neckline again. Not particularly typical of head and shoulder top formations. Usually they don't test the neckline but once, and that's it, and it gets broken and it's often running to the downside. This bounced off of the neckline on Wednesday of last week, and again Thursday, and again today. We really can't afford to go sideways too much because it starts to ruin the pattern. So far, the symmetry is almost exact. The rally high I thought was going to be the middle of the circle. I was one day too optimistic as far as the rally high was concerned, which was the previous day, and a little bit too bullish. It didn't quite get as high as I expected, but that is good enough, certainly. And that, I believe, is the last shoulder high so far. I'm just simply waiting for a close below that neckline in order to start moving down to 187. 287. Next, cocoa. Looks like it's about to punch into new high ground again. We're not overbought. This market is very strong. I don't see any long-term bearish or even short-term bearish signals. Looking for minor new highs, stair-stepping its way up. Now coffee, actually a pretty similar situation, is able to break through the resistance level on a closing basis after a test of it on Wednesday of last week. Thursday, we got above it and stayed above it on a closing basis, came down to it and closing on the resistance level top, and now starting to move up again. After a minor dip into new lows, testing the previous Thursday's low. This looks friendly. I don't like the fact that it's super close to overbought, but sometimes, when you get major breakouts, as you get into oversold or overbought conditions at the time the breakout happens. So if this all of a sudden explodes to the upside and blows to the top at 196.90-ish, it'll be overbought again, but that could be a couple of 3, 4, 5 days in a row. This thing could get super hot, super quick. No pun intended, coffee. Okay, otherwise, it's stopped so far. I'm going to wait to see what happens here. No comments other than what I've made. Sugar, oversold, should turn around and rally anytime now. It keeps refusing to do so. It's staying in oversold condition. We don't have any reversal, so I have to wait for a buy signal. Next, cotton. Looks like it's going to break out of this little channel that it kind of started, unless today's lows hold, and I don't think so. It's not even close to oversold at 37. So looking for a test of 78.50 at a minimum, again, support. And if it breaks below 76.95, we could have a pretty sharp big break. Neutral to bearish, cotton. And now back to the E-mini, which is holding its own. Let's check the individual charts real quick. Back to the indexes, and then I'm going to show you the Santa Claus rally information. Wow, we're right up there about high and last. Santa Claus rally, here we come. I can hear the jingle bells. This is the 5-minute chart on the S&P 500 up to and including today. So I'll drag it over to last year's trade, which is going to be right about here. Excellent, excellent. And why don't I see my strategy? Hang on a second. That's not nice. Let's do a redraw. And last year it made, and it comes back to today. So let's drag it back one more time. I apologize. We should have been seeing the actual trades. Maybe. Okay, I see what's happening. I apologize. We haven't got any. Okay, let's just do this tomorrow and I'll fix this. But I do want to show you the equity plot. I'm not going to be using TradeStation to do it. I'll just use an editor. This is the chart of 1998, first 3 trades, lost 1 on that trade. Remember, every Christmas is 3 trades. So every 3 is 1 Christmas. And each trade is shown. And we had a few years of sideways and a little bit lower. Then we had a whole string of years that was great. And then we had a tough time for a couple of years. But since approximately, I don't remember which year it was, I can tell you tomorrow in the TradeStation chart, we have made on the Santa Claus rally 11,900. What was the exact amount? I wrote that down and haven't got, okay. Let's say this. Last year, we made $458 with all the Santa Claus rally trades. The year before was spectacular. That involved that one trade to there, to there, and to there. Those 3, $4,219 in about 2 weeks with the Santa Claus rally. Now, obviously, that's one of the best, if not the best, time frame on this chart in 25 years. But there's been a lot of consistency for significant amounts of time. More detail tomorrow. You guys have a great day. Profitable trading to you.